everyone, and welcome to today's video. Today's topic, we will be going over stop loss orders, tips and techniques. We're going to look at what stop loss orders are, why they're important, and how to implement those within Optimus Flow using a few different strategies. So first off, why are stop losses important? Stop loss placement is a critical component of a sound trading strategy. Failure to understand the full context surrounding stop losses can place you at a significant disadvantage. And then there are many indicators that can help you evaluate stop loss choices. Some may be better for specific time frames, and some may be more objective or subjective than others. One of the first things that we learn or should learn as a trader is how to place a stop and where to place a stop. Typically, the reason that a stop loss strategy can be so difficult to implement is because we don't necessarily know where to place our stops. We don't have an effective strategy to rely on when it comes to placing stops. And furthermore, placing a stop can be more psychological in the sense that when you enter a trade, you want to be right, obviously, and placing a stop or defining a point in the market that you'll exit the trade forces you to admit that you will be wrong at some point. So there's a lot of factors that go into placing a stop, but today we're going to go over just some basic strategies and effective ways to look at the market to define areas that you can place a stop and become more comfortable with placing a stop and developing a strategy that works for your trading style. So assuming that you are using a trading strategy that has a higher reward to risk ratio, typically your stop is going to be closer to your entry than your take profit. So with that said, I always think it's best practice to place your stop first and then place your take profit. And ideally, we're going to go into a trade knowing exactly where we're going to be wrong and exactly where we want to see the market go in terms of our take profit. So there's a few ways to place a stop within Optimus Flow. I always trade with the depth of market here on the right. And if we right click over here on this screen, sometimes it'll be slim mode activated. And I just want to make sure that that's unchecked so we can have all the options and see all of the options here that Optimus Flow offers. Quantity, let's change that to 1, and that's just going to be how many contracts you're going to place on a specific order. And we can click down here on a bid. The easiest way to place a stop is to hold the shift key and then hover over an area over here, and it'll come up with stop +1. That's the number of quantity, or that's the number of contracts that we have, and we can just click that. We can also right click on any order that we have and it will delete it. That is the easiest way to enter a stop here in the depth of market. And you don't have to have an order placed on a bid or an offer. You can just place a stop order anywhere, just like that. The other way that I like to place stops is when I originally place an order using brackets. So we have bracket mode here, simple and multi. I always stay on simple, and if we just left click here where it says no stop loss, we can define how many ticks away from our entry price it will place a stop automatically. And I like this because it's basically a safety net of, now you don't have to remember to place your stop, it's always going to do it for you. I pick just a standard tick amount for the stop, and then depending on where the market's trading or how big the range is, I can then move it depending on where exactly I want my stop. So if we enter a position here, and all this is demo, it's for demo purposes only. Let's say we enter a long position at 4/4 or 5/4. It's automatically going to place a stop 8 ticks away from your entry. Now, if we want to move that and we say there's some support here, and I want to make sure that I have my stop below this support, assuming that I am indeed long and have a long bias. I don't want to get stopped out at the bottom of the range on support. So I would just simply click and drag this stop below. And we can see here that it's not showing up on the chart. So another tool that we have within Optimus Flow is to right click on the chart, click on settings. And if we go over here to visual trading, we can activate our positions, any orders that we have, and any stop losses. So now we can see visually on the chart where we got into the market, where our stop loss is, and place another order up here for a take profit. And we see that on the chart as well. You'll notice here that because I placed a new order, it also registered this as an automatic stop loss. So to prevent that, or to change that rather, we could also activate our take profit. And let's put that 20 ticks away from our entry. So now when we enter the market, it's automatically going to place our stop 8 ticks away, and we'll see that it places our take profit 20 ticks away. And we can click and drag these any way that we like. Same with the stop loss. Now the cool thing about this bracket mode is that when my stop gets hit or my take profit, it will cancel all the other orders that are tied to this specific trade. So let's just move our stop right here. So I got stopped and it removed the take profit. So now we are flat, and we can verify that with these here. I have 0 buy orders and I have 0 sell orders. When it comes to placing a stop loss, there are a number of different indicators and strategies that we can use to place our stop loss. But before we get into that, there's one overriding rule that should define where to place your stops at all times. And that is your stop loss should be placed at a level beyond which your trade market bias is no longer valid. So what that means is when we enter a trade and then also define our stop loss, it should be at a level that the market trades to that says our thesis is wrong. If we approach our stop levels from a monetary basis and we don't get the optimal entry, that can mean we're placing our stop at a point where we're not actually wrong. We're just getting stopped out through normal market movement, or let's say if we trade in this range right here and we're biased long and we have an 8 tick stop, let's say we were to enter at 5.5 in the middle of the range, that would place our stop at 3.5, which is the bottom of the range, which is support. So we want to be looking at the market and placing our stops at levels that the market is actually saying we're wrong and we need to get out of the trade. So there are a few ways to calculate that depending on how much money you have in your account, how much money you're willing to lose, or risk, I should say, on a trade. With the S&P Mini, 1 tick is $12.50. So if we had a standard 8 tick stop, we would be risking $100. Now, if this actually is where I wanted my stop, just below support, that would be okay. We're not having our stop in the range where it could easily go to and get stopped out before it moves up. But ideally, this is only 1 tick below the bottom of the range. So ideally, I'd probably want to have my stop a little bit further out to account for normal market movement. There are 2 other indicators and strategies that we can use to place our stops and identify potential stop areas. And I like to use them in conjunction with one another. And that is an exponential moving average and swing points. So what we have here is a 5-minute chart of the S&P Mini. And we can see here that price came down, retested this level of support, came down again, but did not break the market structure by making a new low. And then it broke to the upside, broke this high by 1 tick or 2 ticks. And now it looks as if price is continuing to move up. So if we entered a long in this area when it broke back up into support into this range, Our first target may have been this high, but now price is coming back down to this area. So if we were still long, hoping for a move up higher, we could potentially place our stops below swing lows, which would be identified here, maybe here, and then here, and also below a moving average. This moving average is a 50, and you can use anywhere from a 10, a 50, 200, all depending on your trading strategy. But in this case, if we were long and we wanted to see our trades here, let's activate this. We could make sure that our stop is below this swing low and also well below the moving average. And then the last indicator that we will use to determine stop levels is Fibonacci levels. So taking the same example, we have a long bias, we're long, we can draw, just redo this for you, a Fibonacci level from this low where it didn't break the previous low up to this high. And it gives us the 38.2, the 50, the 61.8. So these are also levels that you could use to place your stop, depending, again, how long you were holding the trade for and what you saw in the market. But the nice thing about using the Fibonacci levels is that it doesn't move. So this spot doesn't move. Whereas sometimes stop levels are subjective, this provides a more objective, fixed point of view of where you can potentially place a stop. The other thing that you can do with an Optimus Flow is have a trailing stop loss. So to do that, we're going to come over to the depth of market, click on stop loss, and then just activate this where it says trailing stop loss. So let's enter the market. And assuming this move keeps going, we'll see this work. But essentially, if we're short and price keeps moving down, it's just going to trail this stop loss and keep it at 8 ticks away from the furthest price it traded away from your entry. So as price moved down 1 tick, it automatically moved my stop loss down. And so now as this keeps going, it'll keep moving the stop loss, but it won't move it back up. So now my stop loss is in profit. And if price moves back up here to 99.25, I'll be stopped out with a 1 tick profit. And as I mentioned before, I had a take profit on, so that's 20 ticks away from my entry, and that will not move. That is all I have for you today on stop losses. I hope you enjoyed the video. If you have any questions or comments, please post them below, and be sure to visit us at optimusfutures.com. Thank you.